Namaste, welcome to Arthaniti, where we discuss money and money matters to help you in your investing decisions. Now, in our continued endeavor to study quality stocks with good fundamentals, today we are going to study CMS Info Systems. Now, this was on the basis of a request by a viewer on one of our videos where he wanted me to analyze this stock. Many of us have seen CMS vans zipping around the city. Have you ever wondered what these vans carry? Well, they are the heroes of the cash economy. They transfer or transport the cash needed to stock up ATMs. ATMs which are in thousands for hundreds of banks across the cities. Whenever we need to take out cash, we quickly go to the nearby ATM and withdraw it. But to fill those ATMs in with cash, adequate cash, CMS is the one which comes to the rescue. Now, in this increasing environment where digital payments and UPI are increasingly being used, is cash really needed? Well, according to a RBI survey, which was done in March 2024, even though digital payments and UPI share has increased in transactions, cash transactions still account for 60% of all the give and take that happens in the country. Now, like we are in March 2025, I'm pretty sure that the percentage has gone down from 60 as more and more users are shifting to digital and UPI. But will cash ever go out of the system? I don't think so. Correct. So CMS, where not only is in cash management and ATM servicing, it is also transforming and expanding its business operations along with changes in the environment. Now, every company wants to stay in business and stay relevant. In this video, we will not only analyze the fundamentals and financials of CMS, but we will also look into what CMS is doing to expand its business operations from its current business model so that it stays relevant in times to come. CMS was started in 2008. That time it was part of a company called Bharat Securities Limited, which was basically into security printing and stationery. Now, as the economy developed, CMS Info Systems came into existence as we know it today. The initial business model of the company included handling cash movement, ATM management, and remote monitoring. So basically, they did everything behind the scenes to ensure that the cash infrastructure ran smoothly. Today, CMS is India's largest cash management company. Today, they manage nearly 62,700 ATMs and handle cash for upwards of 122,000 retail points. So, can you imagine the mammothness of their operations and the logistical challenges they must be handling to move so much cash from so many different locations? To address the elephant in the room, is cash still the king? Will the relevance of cash transactions remain going forward? Well, as I've already told you, an RBI study conducted in March 2024 said that of all the consumer transactions, 60% still accounted for in cash. Now, although after COVID, the significance of digital payments and digitization has increased, and more people are shifting to this new mode of payment, the relevance of cash is still very much valid, especially in the rural areas where still cash is the king. But over a period of time, cash will not go out of circulation, but the prominence of cash transactions will definitely come down. So this is one point that you have to keep in mind if you are thinking about investing in this company. But again, what would make a difference is how CMS is going to address this elephant. How are they going to address a situation where the importance of cash transactions or cash itself is going to reduce over a period of time, and more digitization sets in? How are they strategizing to still stay relevant in business? That is what is going to make a difference for your investing decisions. Let us look at the financials of the company. What do numbers say? Now when we check the previous quarter results, the quarter ended December 2024, if you check the revenue figures, it stood at 581 crores. Now compare it with 625 crores for the quarter ended September 2024. So the revenue has gone down from its previous quarter, correct? If you check the net profit, it stood at 93 crores compared to 91 crores in the previous quarter. Now, on a yearly basis, for the year ended March 2024, the revenue stood at 2,265 crore rupees. If you check 12 months trailing till date, the revenue is at 2,433 crores. So, by the end of this year, yes, the revenue is set to cross that 2,265 mark. The net profit for the whole year ended March 2024 stood at 347 crores. The trailing 12 months revenue stood at 366 crores. Yes, so on a yearly basis, if you check the performance, it has been fairly good. On a quarterly basis, though the revenue has come down, the profit has seen a 7% increase quarter to quarter basis. Let us check the fundamentals of the company. Now earnings per share stands at 21.39. Now earnings per share basically means how much profit the company earned per share in the last year. Secondly, PE ratio, price to earning ratio, stands at 19.57, which basically means how expensive the stock is compared to its earnings. A lower PE ratio means the stock is undervalued or cheaper compared to others in the same industry. If you check the industry PE, it stands at 36.11. Basically, it is the average of all the companies in the same industry. So the industry PE is 36.11. Compare it to 19.57 for CMS, which means that CMS is undervalued compared to its peers. Next is the book value per share. Now, what is book value? Book value is basically assets minus liabilities. So, tomorrow, if the company sells off its assets, pays off its liabilities, what is the value that remains per share? It stands at a good 127.96 rupees. PB ratio, again, price to book value. As I told you, book value is assets minus liabilities. So, price to book value is how much investors are willing to pay for the book value of the company. Higher the book value means investors are willing to pay a premium for the company's net worth. The book value of the company stands at 3.69. Next, long term debt to equity is a mere 0.09, which means the company is practically debt free. Return on equity basically means how efficiently the company is using shareholders' money to generate profit. Higher the ratio, better it is, right? The return on equity is 19.78%, which is fair enough. Dividend yield is basically the dividend that you will earn as a percentage of stock price annually. So it is a, understand the definition, percent, the dividend that you will earn as a percentage of stock price annually. So the dividend yield is 1.40%. What this shows is basically the company is fundamentally strong and has good financial health. If you check the investors in the company, promoter holding is zero. Now, Cyan Investments of Singapore had a stake in the company which it had bought earlier and was looking for a good exit. Now, seeing fair valuations, good valuations, the company offloaded its entire 26% stake in February 2024 with a block deal of nearly 1500 crore rupees. The FII investments in the company came down by 2% in the last quarter. In September quarter, they were around 40%, and in the December quarter, they came down to around 38%. Some of the notable FII names in the company are Abu Dhabi Investment Trust, Nomura India, Goldman Sachs, uh, MIT, Vanguard, uh, Pinebridge are some of the known names who have invested in the company. When it comes to domestic investors, many mutual funds have stake in the company. SBI Small Cap Fund, ICICI Prudential Multi Cap Fund, where it has increased its stake by nearly 0.30% in the last quarter. Aditya Birla Sun Life Mutual Fund, again 361 Focus Equity Fund, Abacus Growth Fund, to name a few. Correct. So many known names in FII as well as DII category have invested in this company. The total DII holdings, which were 26.66% in September 2024 quarter, rose to 27.03. So a marginal rise of nearly 40 basis points in the last quarter was seen in DII holdings. Now, when it comes to competition in the industry, some notable key players in the industry other than CMS are Brings Arya, Secure Value India, to name a few. But how does the industry work? The more ATM you manage, the more profitable you are, right? And CMS, being a market leader in the category, has a strong hold over the market. Plus, its reputation of reliability is also crucial for its business. uh, the distinctive factor that sets apart CMS from its competitors is its strong relationship which it maintains with banks. Now, as the payment landscape shifts from cash to digital, the survival of companies like CMS will be decided on how soon they are able to adapt to this changing environment. What more can they offer to their clients from merely being a cash management service? CMS is adapting to this change, and let me tell you some key pointers what they are implementing in their service offerings. Now, they are moving towards more managed services and integrating Internet of Things, basically to cater to growing digital payment ecosystem. Secondly, they are investing in advanced technologies to optimize their cash management operations and improve efficiency. Thirdly, utilizing data analytics to provide valuable insights to clients regarding cash flows and transaction patterns of users is what they are expanding into. What do analysts have to say about this stock? Well, the overall consensus is a buy recommendation from analysts with a average target price of around 585 rupees. Now, CMS, with its strong fundamentals and financials, looks like an all weather stocks. The continued FII and DII interest in this stock is also worth noting for individual investors like us. But again, when you are investing in small cap and micro cap stocks, the time for which you want to remain invested is very, very crucial. Longer the time, better are the results that you see in these kinds of investments. Why? Because in short term, these stocks tend to be very, very volatile, what we have seen in recent weeks. Correct. So how you invest and why do you think this stock is worth investing completely depends on your risk appetite, your temperament. How do you remain unaffected by short term volatility? Do you have the patience to remain invested for a long haul? Is all that depends on if you are thinking of making an investment in a company like CMS. What you think of this analysis and about this stock is what I would really like to hear from you. Any different views from what I have given in this video are most welcome. I would really like to read those comments. Uh, if you have liked this video, please like, share, and subscribe to my channel for more such informative content. Let me know any stock that you would like me to analyze, and I will do that in forthcoming videos. Until next time, stay safe and goodbye.